What is the difference between real estate and the stock market? And maybe you're going to find out today from Jerremy Newsome which one fits your skills, your talents, and your desires for your future better. Stay with us. Hey, welcome into the Fearless Investor. My name's Kyle Stanley, and I'm excited today to have you listen in with Jerremy Newsome. Jerremy is super charismatic and really, like, what I just can tell you, is super passionate about what he does with day trading and helping other people in day trading. But the big thing that I want to really point out today is, we're always talking about real estate investments. I bring in people like Jerremy because I really want to challenge your mind every once in a while to see, is real estate the best thing for you? Is there other things out there that can either complement real estate, or maybe you're starting to realize, hey, I like higher risk things. I like learning trends. And those are the things that we're kind of talking today with Jerremy about. I love real estate because for me, real estate is predictable. I know that if I do X and Y, it will probably yield Z. With this whole day trading thing that Jerremy's going to talk about, it's up and down. It's one of those things that you hit a home run and then you strike out. And so if you feel like that's the kind of person that you are, or maybe you're going to hear some other things that today will show you, hey, no, definitely real estate, or hey, no, maybe I need to look at day trading. That is the goal for why we're sharing this. And before we jump into it with Jerremy, I want to definitely make sure that you have gone to our website and checked out at fearlesskyle.com, our Airbnb profit calculator. You can go right there and download that profit calculator to see if you have an Airbnb deal or Airbnb dud, and learn how to evaluate your market as well. So that is a big thing that I would love if you went and checked out. And before we get too deep into that, let's go ahead and get deep into this idea of day trading with Jerremy Newsome. Hey, welcome into another episode of The Fearless Investor. You're here with me, Kyle Stanley, and Jerremy Newsome, the CEO of Real Life Trading, coming in from Nashville, Tennessee. Jerremy, thanks for being on the show today, man.
My pleasure, Kyle. Thank you for having me. I'm
Yes,
excited
absolutely.
about this.
Yeah. So, hey, man, I'm excited to have you on the show today because, a lot of our audience is real estate investors. You do a lot of day trading, but you also have a lot of, the real estate mindset as well. So I'm excited to kind of tie those two things together. So, but first of all, as always, what is your most interesting, either real estate or just overall investing story that you can share with our audience?
I got a quick one for you, my friend. So I am the unofficial Guinness World Book record holder for buying silver at its highest price of all time.
Oh, gosh.
A few days before my 21st birthday, I bought a lot of silver.
Okay.
Literally at the highest price of all time. So.
Oh my gosh. And have you learned anything from that experience?
A little bit. I've learned a little bit. Yeah. I've learned how to at least appropriately try to spot bubbles.
Yes.
And understand what it looks like and what it feels like. And yeah, man, I hope to never do that mistake again.
You and I have something in common because before I ever even got into real estate, so many people were like, you got to get into Bitcoin. You got to buy Bitcoin. And literally the moment that I pressed that purchase button, all I've ever seen it do since then is go down. That is, it literally was at its top as soon as I pressed. I'm not talking about the same day. I'm talking about the same minute. Like, I never have seen it hit that price again. So that's our luck. And hey, two negatives make a positive. So we're going to bring good luck to our audience today.
That's it. Exactly right.
So Jerremy, tell us a little bit about you. What brought you into day trading, and really just kind of overall what you do on a day-to-day basis?
Yeah, totally, man. What got me into the stock market in general, ironically, is a fun story. It's a long story, but I'll make it really short. I was insanely poor growing up.
Okay.
I grew up in South Georgia, had a phenomenal childhood, just very monetarily strapped. And I watched a movie that changed my life when I was 6, Forrest Gump.
Nice.
So Forrest Gump, in the movie, he said that him and Lieutenant Dan invested in a fruit company and they did not have to worry about money anymore. Well, I had never heard that phrase. We didn't have to worry about money anymore.
Right.
That was like a paradigm shift for me, man. That was when everything kind of changed. And so I asked my dad, what is investing? And what is the fruit company? And obviously he told me about Apple and how Apple works and what it is. And I more or less begged him to invest. And so I saved up enough money by picking blackberries, like selling blackberries door to door. I made around $1,300 in the summer of 1994. Sounds like a Bryan Adams song. and bought shares of Apple back in 1994. And so that was kind of like
Wow.
the thrust into this whole thing. I was 6, man, and I wanted it. I knew it could change your life. I didn't know how or why or what, but Forrest Gump did it. I'm doing it. And that's kind of how it threw me into this world.
So, okay, you made $1,300 at the age of 6 selling blackberries.
Yeah.
That's the like ultimate entrepreneur getting started. I feel like that's a Gary V story right there. Like not
Yeah.
not doing the baseball cards, but blackberries. Meanwhile, like when I was 6, I was selling VHSs door to door for like $1 a piece, but I definitely didn't make $1,300 in the summer.
Well, the thing is, man, I was shoeless and shirtless, and I was wearing jean shorts, so I had a pretty high closing rate, And little old ladies would give me $5, $10, just because I'm there at their door. They thought I was cute. So
That's amazing.
yeah,
That's
man.
so cool. So, okay, you're 6 years old when that happens. You
Yep.
buy some Apple stock. Now, what does that Apple stock look like to date? And what did that propel you into, as you got older?
Totally. So, overall, that's the good news and the bad news. So the good news is I did make money off of it. The bad news is I sold those exact shares in 2000 when I moved. So I moved from Georgia to Florida,
Okay.
and it was 2000, top of the tech bubble. Made 12 grand off that investment,
Yeah, that's
and
great.
dad handed me $12,000 as a 12-year-old, and that's kind of like what did me in forever, man. But those shares now would be worth tens of millions. So a little hard to chew, but it learned a lot of lessons, man. Because the ironic part is, Kyle, that investment, literally, I would not have had to worry about money anymore.
Yeah.
And the good news is I don't at this point in time in my life, but overall, like going up to that level, it's really intriguing to know that it could have played out the exact same way, so much easier.
You heard the line in Forrest Gump that probably no one heard. Like everyone quotes that movie, and I've never heard that line quoted before. So,
Yeah, rewatch it, man. It's a good film, but 78% of the way through the movie, because he starts talking about all the things he did with money, all the
Mhm.
cool things, right? He was building a church, he was doing a hospital, he gave to Bubba's mom, and just seeing all this generosity with money made me want to do it. And it wasn't real estate; it was stocks. And I do love real estate, man. I love real estate investing, and like I mentioned, I'm actually at one of my business partners' real estate offices right now in Nashville. And I go to conferences all the time and talk about the differences between real estate and stocks. And I think you need or should have some experience in both to really feel comfortable and confident as an investor.
Yeah, and like I was telling you before we got on the show here, I think the majority of the people that are listening right now are wanting real estate. They're wanting to get into real estate. But I think the important thing and why we really made a transition in this show of not just real estate, but overall investing is because at the end of the day, people have different skills that will put them in different positions to be successful in things that maybe I would be successful at that they won't be, or vice versa. And for me, I love something that I can touch, feel, and see, and go to a house and see, wow, this is what it could turn into, or go to an apartment complex and this is what it could turn into. And you don't really necessarily do that in the day trading world and stocks, but there might be some people that are listening right now that hear some things today from you that think, hey, I think I might be really good at that. And
Sure.
so let's talk about let's just kind of bring it back to what you said there. Let's talk about the difference in your mind between what you do and what a real estate investor is doing.
Absolutely. And you're totally correct, man. So with real estate, it's tangible, right? It's physical. You can almost, in a way, force appreciation in a house if you need
Mm-hmm.
to or have to. And it can be done with enough money or enough time or enough vision. And it doesn't work that way in stocks. With stocks, it's all about the mental game. It's all about understanding why something is happening and what the demand is going to be. So here's an example. Right now, a lot of people are staying at home,
Mm-hmm.
and with the whole virus and the changes and stay at homes and working and becoming entrepreneurial and building their own businesses, there's a company out there that's benefiting a lot from this, and that company is Wix,
Okay.
right?
I thought you were going
So
to say Zoom.
Zoom's another one, man.
Yeah.
Zoom just happens to be another one, but let's just say Wix or Zoom. We can take both.
Okay.
I think that someone could have sat down and thought about this 4 months ago,
Mm-hmm.
or let's say March when the whole virus was happening. They could have said, wait a minute, all right, everything is shutting down. People are staying at home more, but they still have to communicate. They still have to build. They still have to make money. They still have to grow. What are some companies on the stock market that could improve that value to that person that's there at their house? And if they would have taken some money, any amount of money, and had bought shares of either Wix or Zoom or even Etsy, okay,
Okay.
just 2.5 months ago, it would have tripled your money in
Wow.
2.5 months, tripled it. So you could put in 1,000, 10,000, or 100,000, you tripled your return on those three stocks.
And we're talking 4 short months, which is amazing.
Exactly. And
And
that's a little bit of a difference between real estate and stocks, is you could have done it from your phone with any amount of money very quickly, and it's extremely liquid.
Mhm.
Extremely liquid.
Now, that's something that I think a lot of people don't know. When you say extremely liquid, I think of, oh, I got to have a Roth IRA and I'm not going to get that money till I'm 59 and a half, 401k. I'm not going to get that money till I'm 70 and a half. So what ways are you doing it that's making it liquid?
It's a great question, man. So you can create a normal brokerage account. So the things that you're mentioning are retirement accounts.
Mm-hmm.
And there's nothing wrong with retirement accounts. I have a retirement account, long-term stuff I just don't touch, right? But the short term, you can have a regular cash or regular margin, just trading account.
Okay.
And that trading account can be so liquid, in fact, that you can have a credit or debit card attached to that account, so you can spend the money that's in there through a card.
Interesting. Is
Yep.
there a
And
startup cost
so
for that?
there are no startup costs for that at all.
Wow.
None.
Okay. So
Other
where would
than
someone,
time.
what's that?
Other than time of filling out the application.
Yeah, well, there you go. So, I mean, what you're talking about is much different than just having a financial advisor by your side, because you're in control. Am I right in assuming that?
Yeah, you're absolutely correct, man. And
Yeah.
so it doesn't have to be, hey, fire your financial advisor and never use them, although I can somewhat preach that at some point. But the thought of, all right, wait a minute, let me open up an account
Mhm.
and use my brain power and knowledge of what the world is doing, very relatively simply, using that knowledge and that skills to put some money into a company that I think has a very high chance of improving and growing over time, and using that human capital to create actual capital through the stocks.
So,
And
yeah, no, sorry, I didn't mean to cut you off there.
all good. I was just saying,
Yeah.
and it's immediate. It can happen within minutes, man.
Yeah. So I'm listening to your story right now, and I'm thinking as one of our listeners, well, at 6 years old, he started to train his brain, and he got that immediate return on money at the age of 12, and of course he's got the knowledge, he's got the experience, he's trained his brain at a young age. And maybe I'm over here, I'm 30 years old, I'm 40 years old, I'm 70 years old. I can't train my brain after all this. What would you say to someone like that?
It's a great excuse.
It's a good
That's what I
answer.
would say. It's a great excuse. I mean, if the man who says he's right and the man who says he's wrong are both correct, right?
Mm.
So in a situation of, it doesn't take that much effort. I mean, yes, I have devoted my life to these thoughts and to these ideas and these concepts, but same thing with real estate or any type of investing. It simply does take a little bit of knowledge and some know-how and spending some time in order to create that train of thought. The same train of thought can be applied to being an owner rather than just a consumer. So here's an example of what I mean by that. You, my good friend, have a Netflix account for sure.
Mm-hmm.
And a lot of your listeners have a Netflix account. Well, Netflix is a publicly traded entity. So what you could do is you could buy one single share of Netflix, which 4 weeks ago would have cost you about $400, right? One share. And as of this exact second in time, I'm gonna pull it up behind you. You're not gonna be able to see me, but as of right now, that exact share is worth $463.
Okay.
So you buy one share, right? You're owning rather than just consuming. You buy one share of Netflix for 400. Now it's 463. You sell it, and now you're paying for your Netflix subscription for a good 6 or 7 months because you bought one share of Netflix.
That's awesome.
And you're being an owner rather than just a consumer. So you can do that with Nike. You can do that with Peloton. If you have a fur baby, AKA a cat or dog, and you buy something from Chewy, right? Chewy,
Yep.
CHWY is publicly traded. You can own some shares of that. If you took an Uber in the last month, buy some shares of Uber. You can slowly start conceptualizing the idea of being an owner rather than just a consumer, rather than always consuming the products. Take a little bit of your money and invest in a company that you actually spend money on all the time and let that grow for you while you sleep.
That's good. So one of the things that's coming to mind for me right now is what is the risk level of this compared to something like real estate? Real estate, I know that if I get a property, let's call it, back in 2012, getting a property at maybe its lowest cost, I know the market has nothing to do but go up from here. And all I've got to do is just like a lot of people say, don't wait to buy real estate, just buy real estate and wait. And that whole mindset is, even today, even though we think we're at the top of the market, we're pretty confident that in 20 years, if you buy a piece of real estate today, it's going to be worth more in 20 years than it is right now. You can't really say the same for every single stock and every single company. So to me, it feels like it's riskier, but I want to hear from your perspective.
It's a great point, man. And I would say that there's a lot of real estate investors, definitely if you're listening to this, that could argue that there are some homes that you've heard of or seen. If you buy a house over the flight path of a plane, might not ever appreciate in value. So you might be able to rent it out and create cash flow, but the actual home itself doesn't actually ever appreciate, or at least not very much. So one could argue that 20 years is a long time to wait for something. But in stocks, since it is so liquid, I love bringing up the example of one of my clients. His name is Clive, and he lives in Canada. I think it's Quebec. I forget the other province. I forget, but he does not live in Quebec. I think it's Saskatchewan. Regardless, his name is Clive, and he trades AMD, which is Advanced Micro Devices. Many people have heard this company. They're very familiar with this company. And AMD trades around $50 a share for the last few months.
Okay.
All Clive does is he buys or sells 1,000 shares of AMD every single day. And his goal is to lose 30 cents or to make 70 cents. So the math works out where if he buys 1,000 shares and it goes down 30 cents, he loses $300. Or if it goes up 70 cents, he makes $700. And it's just simple basic math. So even though a stock could be around or could fluctuate or could go up and down, if you have the ability to understand math behind stocks, it doesn't become as scary because you can do it every single day, right? You could take a $50,000 investment, put into the market, get out of the market, put into the market, get out of the market every single day, and just stack the odds in your favor with simple math. And if you do that over enough time, you can do quite well.
That's really interesting. So that makes me start to think, as a person who usually is getting in with a retirement account, the whole thing with financial advisors is, just wait, don't make any rash decisions, and let's just wait, and it'll go up and down. But in the long run, it's always going to end up that you have more money than when you started with. But what you're saying is, for what you're doing at day trading, is there's a lot of movement going on. So what is like a typical amount of time that you're holding on to a stock that you're buying?
It's a great question, man. I'll answer that with 3 parts. So in a day trade, I will get out usually within 3 hours. Wow. So I'm buying and getting out within a 3-hour time period. So in Nashville, the market opens at 8:30. So oftentimes by 11:30, I'm more or less done with the work, and I can do awesome, podcasts with cool people like you. So, because right now it's about 1:30 when we're doing this. There's another thing called swing trading. So swing trading is where you get into a position for days, weeks, or maybe months. And generally, I like to say I try to create bill paying money through swing trading. So I'm in a position, let's say Netflix, and I'm in and I'm out 3 weeks, or generally less than a month. So I would say the vast majority of my trades are less than 30 days. And then, of course, I do have investments. I have stocks or ETFs that I truly do feel like will be here for 20 years. And I buy those and own those and accumulate those over time. And one very, very interesting fallacy that I would love to share with some people out there is the whole don't put all of your eggs in one basket.
Okay.
I disagree with that, actually, because that's how you can create true wealth. Putting a lot of eggs into a basket. Mark Cuban has been quoted to say that diversification is for people who don't know what they're doing.
Yep.
Now, a lot of people go, well, that's easy for a billionaire to say. The thing is, to become a billionaire, you have to become a billionaire. So it didn't just happen to him overnight. He put a lot of eggs into an AOL basket back in 1997, 1998, 1999, and 2000. and made a substantial amount of money really knowing that position. So now I'll ask you, Kyle, Mark Cuban has 25% of his liquid net worth into one stock. What stock is that?
Is it AOL?
Nope. Amazon.
Apple? Oh, Amazon. Yeah. Okay. Nice.
So the thing is, a lot of people will go, oh, well, that's easy because, again, Mark Cuban's a billionaire. But it's like, no, you're missing the point. Let's say that you are worth $2 million. That's the exact same thing of you taking $800,000 of your money and putting it into just one company, be it Amazon or Apple or whatever. You named, phenomenal company, Apple. So the thing is, if you want to create a lot of wealth, you do have to sit down, understand, think, and create an idea and a path and a company that you know is likely, a strong likelihood is going to be around for the next 8 to 10 years. And not only will be around, but will grow, and it could either double or triple. And there's a lot of companies out there fundamentally that you can just sit down and go, yep, this company's going to at least bottom line triple over the next 3 or 4 years. And you can make a lot of money if you focus on that company.
How do you start to see those trends, train yourself to learn those trends? I mean, are you helping people to understand that?
Yeah. So earlier on, you kind of mentioned and you asked a little bit about my background and what I do now. So what I do now is I kind of do this, man, where I'll educate people either in person or on webinars about how all this stuff works, how to create that mental map of what to invest in, how to invest in, a little bit of the skills and websites and tools and tricks that you can go on and study and pretty quickly get an idea of, is this company good or not? Like Square, symbol SQ. You know exactly what Square is. Most people who are watching know Square is, or PayPal, right? Two very interesting payment processing companies, two totally different markets, and two stocks that have absolutely murdered it in the last 2 or 3 years. And they will continue to murder it for the next 2 or 3 years from here as well. They're going to continue to do extremely well. So when we're talking about just generalizations, my goal, my mission of my company is to enrich lives. And I do that by teaching people how to properly and safely and hopefully consistently profit from the stock market.
You know what you should do is you should find someone like Doc from Back to the Future and team up with him. And then you teach people how to go back in time and get all the right stuff. And you've got a real business on your hand then.
I'm telling you, Kyle, when you invent that time machine, man, just give me a call and you and I will be a billionaire in just a matter of minutes.
That sounds perfect. So give us just a few things here, because I think the big thing that I'm hearing is this is exciting to know that, you can have a story like Jerremy with Apple. You can have a story like Mark Cuban with AOL. If you can start to learn these trends, you can really have a skill, an active skill that teaches or that will really build wealth for you. So that's exciting, but there's, just like what you said, you got to have a plan along the way too. What are some basic first steps that people can take to really making this as secure and rewarding as you think it can be?
Yeah, totally. What I'll start with is one implementation to know that when you have a broker, a lot of brokers can absolutely place automatic orders, meaning you can set up a trade to say, buy here and get me out here, either because it's going good or it's going poorly. You can have these orders set up in advance. So even though, yes, I do day trade as a profession, you do not have to day trade in order to make money in the stock market. You can put in orders and leave them alone for months at a time and let the broker do all the work for you, which is really, really cool. The second really important takeaway that I would love for anyone who's listening to have is, just because a stock is cheap does not mean it is good. Okay. So if you see a stock that's just been trending down and down and down and down, it does not mean it's going to reverse. It's so much easier, my friends, to make money in a stock that is going up, because that's the trend. That's the general consensus. People like it. People are excited about it. It's a lot easier to make money in something that's going up than trying to pick a darling because it's cheap and expecting it to skyrocket. Trust me, I get paid a lot of money to try to help time the bottoms of things. And generally, when I try to time the bottom of things, I say, don't time the bottom on this particular instrument. It's just going to keep going lower and lower and lower. And it's a lot easier to, right now, like the cruise lines are very popular to invest in, right, Kyle? Because people are like, oh, cruise lines are going to go back up. They're going to recover. And I'm not disagreeing with them, but they're also down 85%.
Wow.
Whereas you have a company like Etsy, which again is in a nice uptrend. Everyone knows exactly how Etsy makes money, and it's up 423% in the last 3 months.
Yeah, it's
Or a
amazing.
company like Wayfair, right? Everyone's staying at home, sitting around, ordering all this furniture off of Wayfair. Wayfair is up 765% in the last
Wow.
700% in the last 3 months. And so instead of trying to gamble and pick the bottom on Carnival Cruise Lines, why don't you just play a stock that's already going up, that you already know how they make money, you already can look at the trend and it's doing this, and just play that particular position rather than try to bet something else. That's really a huge, huge takeaway for a lot of newer investors.
Yeah, and that same thing can be said for real estate. I know so many
Hmm.
people right now that are just like, oh, I'm going to wait until the crash. And it's like, well, there's ways that you can get in right now that will still make you money. And what if that crash never comes?
Yep.
What if you think it's coming and then you time it and guess what? It's still going down further. Like,
Bingo.
don't do the Bitcoin thing like me or the silver thing like Jeremy.
Exactly. I totally agree.
Yeah. So Jeremy, this has been awesome, man. I think there's a lot of takeaways from this. Where can people go to connect with you and to get more information about how you can help?
Yeah, totally. So I would simply say reach out to me at reallifetrading.com. That's my stock market education platform and my website. So it's spelled just like it sounds, reallifetrading.com. My personal website is jerremynewsome.com, and Jeremy is spelled with 2 R's. So my dad's name is Jerry, and
Okay.
my mom's was Jerry and me, Jeremy. So that's why
Oh, that's
that's
cool.
why that's 2 R's. Yeah, so thanks, Mom. Yeah, feel free to connect with me. I'm happy to help. You can also Google me. I know that sounds crazy, but I'm Googleable because I spend a lot of time really doing my absolute best, man, Kyle, just like you, to help people and really inspire and motivate and enrich and give people some valuable pieces of content. So I want to say again, man, thank you so much for having me on this show and pouring in your time and energy to allow me to help your listeners.
Hey, thanks right back to you, man. And any last words for our audience just before we log off here?
Last words, do not let the stock market scare you. It's not controlled by fear and greed. It's controlled by fear and optimism. I spend time every single day in a week spending legitimate time with people who are amazing and generous and loving and wealthy, and they want to invest to simply help the world. So do not be afraid of it just because you don't know it or you're scared or you don't understand it. Don't let that stop you from understanding it. My education is free. Go take all of my quizzes. They're free. Everything is free. Go learn, spend the time, and I'll do my absolute best to help you understand this world.
Good stuff, man. Great last words. And we're going to have all that in the show notes. Stick around to find out where those show notes are. Jeremy, thanks so much for being on, man.
My pleasure, man. Thank you so much.
All right, for the show notes, we're just going to do fearlesskyle.com/Newsome. So you don't have to worry about spelling Jeremy right. Newsome is pretty much just as it sounds, Newsome. And right there, you can find out how to connect with Jeremy, how to follow him on his social medias, how to get to his websites, free education, just like what Jeremy said. If you just Google his name, to be honest, you'll find tons of good information. And that will just feed the fire of what you already learned today with what Jeremy had to share. And I really like, even just from a selfish standpoint, I really like learning these new things because I can't necessarily see myself going and doing that right away, but I can see myself starting to train my brain how to see trends. And then every once in a while being like, hey, you know what? This whole COVID thing, maybe a different version of it happens again. What's going to go up again when we go into a quarantine again? Or, hey, if we completely get out of quarantine, what are things that are going to start to rebound, just like we was talking about with cruises? I just think it's really cool to start thinking about those things. So hopefully this sets some sort of fire in your brain as well. And I really want to just encourage you once again, go to fearlesskyle.com/Newsome to see all those resources. Thank you for joining us today on the Fearless Investor Podcast and conquering the world of investing. We will see you next time.